Picture this. You check your investment account and see zero. Not a glitch. It's gone. $65 billion. That's how much one man took from investors over 20 years. And the craziest part? Nobody noticed until he confessed. Today, we're exploring the world of fraud, the schemes that bankrupted companies, affected thousands of lives, and led to major financial regulations. What exactly is fraud? And how do seemingly legitimate companies and respected business people pull off schemes worth billions? By the end of this video, you'll know exactly how these schemes work, the red flags that expose them, and how to protect yourself from becoming the next victim. Let's break it down. Fraud is intentional deception to obtain a financial advantage or cause someone else a loss. It has three key components: intent, misrepresentation, and material loss. From individual scams to massive corporate deception, fraud takes many forms. Why should you care? Because if you have a retirement account, bank savings, or investments of any kind, fraud could wipe them out tomorrow. It costs the global economy hundreds of billions annually. It affects investors, employees, patients, and taxpayers. That means you. Fraud comes in many forms. Ponzi schemes pay earlier investors with new investors' money, a pyramid that always collapses. Accounting fraud manipulates financial records. Embezzlement steals from within. Securities fraud deceives investors. Healthcare fraud makes false claims. And corruption uses bribes to influence officials. Now, let me show you these schemes in action, starting with a 1974 bank collapse that changed global finance forever. Let's start in 1974 with Bankhaus Herstatt in Germany. This bank engaged in aggressive forex speculation. Traders hid massive losses through fraudulent accounting. When the bank collapsed mid-trading day, it disrupted global financial markets and taught the world a harsh lesson. Weak internal controls create massive systemic risk. Fast forward to 2001, Enron. This energy giant falsified $74 billion in accounts using shell companies. They hid debt off the balance sheet to inflate earnings. The fallout: the Sarbanes-Oxley Act, new regulations, and prison time for executives. It remains one of the largest accounting frauds in history. Around the same time, WorldCom inflated assets by $11 billion and overstated revenues. CEO Bernie Ebbers got 25 years in prison. 30,000 people lost their jobs. Investors lost $180 billion. The shocking part? Internal auditors caught what external auditors missed. In 1995, one trader brought down a 200-year-old institution. Nick Leeson made unauthorized derivatives trades totaling £827 million at Barings Bank. He hid losses through falsified records and fake accounting entries. A single rogue trader destroyed Britain's oldest merchant bank, a critical control failure. Now for the big one, and if you're finding this valuable, drop a like right now so more people see this. Bernie Madoff ran the largest Ponzi scheme in history, $65 billion defrauded. He promised consistent 10 to 12% returns using a so-called split strike conversion strategy. In reality, he paid early investors with money from new investors. When the 2008 financial crisis hit, Madoff couldn't meet redemptions. He confessed to his sons. Here's the shocking detail. He used an outdated 1980s IBM server to hide his records. The sentence? 150 years in prison. In the tech world, Theranos promised a revolution. Elizabeth Holmes claimed her blood testing device could run hundreds of tests from a single drop of blood. The device didn't work at all. She defrauded investors of $700 million while misleading patients about their health. Red flags were everywhere. A Stanford dropout with no medical background promising to revolutionize healthcare. Holmes was convicted and ordered to pay $452 million. India's largest corporate fraud came from Satyam Computer Services in 2009. The founder falsified accounts, inflated share prices, and created fake employees. He funneled stolen funds into personal real estate deals. The scheme unraveled when the property market collapsed in 2008. Even the auditors at PwC failed to catch the systematic deception. In 2020, German fintech company Wirecard revealed a €1.9 billion fraud. They falsified balance sheets and created fake cash accounts. CEO Marcus Braun received 4.5 years in prison. The 1MDB scandal stretched from 2009 to 2020. $4.5 billion were embezzled from Malaysia's state fund through shell companies. This international scandal involved major global banks and demonstrated how corruption can operate on a massive scale. So, how do fraudsters actually operate? Pause for a second and think. Have you ever seen any of these in a company you've invested in? They manipulate financial statements with fake revenues and hidden liabilities. They run Ponzi schemes, paying old investors with new money. They create shell companies to hide funds. They use accounting tricks like capitalizing expenses. They collude with auditors and executives. They exploit outdated technology, and they leverage their authority and reputation to build trust. Why does fraud succeed? Weak internal controls, failed audits, no whistleblower protections, executive pressure to meet earnings targets, inadequate regulatory enforcement, and perhaps most importantly, blind trust in authority figures and institutions. Here's what you need to remember: fraud is systematic. From boardrooms to trading floors, deception is endemic. The scale is shocking: billions lost, institutions destroyed. Red flags matter: unusual returns, missing documentation, executive pressure. Controls fail, auditors miss fraud, and internal teams must verify independently. But here's the good news: the consequences are severe. Madoff died in prison. Holmes was convicted. Ebers served time. Whistleblowers who spoke up helped bring these criminals down. Fraud is both massive and preventable, and those who commit it eventually face justice. If this helped you understand how fraud really works, you'll want to see what's coming next. We're examining how modern fraud schemes operate and what regulators are doing about them. Hit subscribe and the notification bell to stay informed. Drop a comment. Which fraud case surprised you most? And share this with anyone interested in understanding financial red flags. Stay informed, stay smart.